Question 1. When analyzing a claim submitted by Peterson Manufacturing Inc., an adjuster notices that a recent fire caused both structural damage to the building and substantial business interruption due to the temporary shutdown of operations. The insured has a commercial property policy with a business income and extra expense endorsement. The fire was a covered peril under the policy's causes of loss. Special form. Which type of loss is the business interruption? Case A. Direct loss. B. Consequential loss. C. Uninsurable risk. D. Replacement cost loss. Answer. Correct answer B. Consequential loss. Explanation. A direct loss is the physical damage directly caused by a peril, e.g. fire damage to the building, whereas a consequential or indirect loss includes the financial consequences resulting from the direct loss, such as business income loss due to operations being halted. The business income and extra expense endorsement covers these indirect losses when triggered by a covered direct physical loss. According to the ISO commercial property policy, indirect losses like loss of net income and necessary continuing expenses are addressed under the business income section. Hence, Peterson's business interruption qualifies as consequential loss, not direct one. Uninsurable risks involve losses not accepted by insurers, and replacement cost refers to valuation, not the type of loss. Question 2. Through careful analysis of risk management techniques, which of the following would best illustrate the use of risk retention by a small business that chooses a high-deductible commercial auto policy? A. Avoiding delivery operations entirely. B. Insuring all risks at full replacement cost with zero deductible. C. Selecting a $10,000 deductible to lower premium costs. D. Transferring all liability to a third-party logistics provider. Answer. Correct answer C. Selecting a $10,000 deductible to lower premium costs. Explanation. Risk retention involves a conscious decision to retain responsibility for part of a potential loss rather than transferring it to an insurer. By opting for a high deductible, the business agrees to bear a larger portion of losses out of pocket, retaining the risk up to the deductible limit. This is a typical cost control strategy used when the likelihood severity of a loss is manageable. Risk avoidance A. Eliminates the exposure entirely. Risk transfer D. Shifts responsibility elsewhere and full insurance with no deductible. B. Avoids retention altogether. According to risk management principles and NAICS standards, retention is a valid method when the organization has the financial capacity to absorb losses below a certain threshold. Question 3. As illustrated by a claim involving Isto Enriquez, who owns a small retail business and suffered property damage from a windstorm. The policy limits under his business owner's policy BOP were sufficient for the building and contents. However, the insurer refused to pay for the cost of bringing the building up to current code standards during repairs. What provision in the policy most likely excludes this coverage? A. Debris removal clause. B. Ordinance or law exclusion. C. Extended business income coverage. D. Preservation of property clause. Answer. Correct answer B. Ordinance or law exclusion. Explanation. The ordinance or law exclusion in most standard property policies, including the business owner's policy BOP, excludes costs related to compliance with building codes or ordinances unless specifically endorsed. If the damage triggers a requirement to update undamaged parts of a structure to current code, EDA compliance, sprinkler systems, these costs are not covered under the base policy. This exclusion protects insurers from unexpected regulatory compliance expenses. Endorsements such as ordinance or law coverage can be added for protection. The other options address different parts of a claim process: debris removal, preservation efforts, and business income extensions, but none apply to code upgrades. This exclusion is based on standard Form CP 1030. Causes of loss, special form. Question 4. From the perspective of underwriting, which of the following scenarios would most likely be considered adverse selection, requiring the underwriter to apply stricter scrutiny? A. A company applying for liability coverage after years of claims-free history. B. A new business with limited loss history applying for basic coverage. C. A manufacturer with a high frequency of prior claims seeking lower premiums. D. A business expanding its insured premises to a second location. Answer. Correct answer: C. A manufacturer with a high frequency of prior claims seeking lower premiums. Explanation: adverse selection occurs when those most likely to incur losses are also the most eager to obtain or retain insurance, often without disclosing critical information. A business with a high claims history requesting lower premiums indicates a disproportionate risk exposure compared to what is priced. This scenario warrants closer under, potentially involving premium surcharges, exclusions, or even declination. The NAIC property and casualty underwriting guidelines emphasize monitoring such patterns to avoid unsustainable risk pools. Unlike options A, B, and D, this applicant poses a significantly higher risk to the insurer, making it a classic case of adverse selection. Question 5. In contrast to insurable interest requirements at the time of application, where must insurable interest exist in property insurance to ensure a valid claim can be paid? A. Only when the policy is issued. B. Only at the time of loss. C. Both at issuance and at the time of loss. D. Only at policy renewal. Answer. Correct answer: B. Only at the time of loss. Explanation: for property insurance, the insured must have an insurable interest at the time of the loss, not necessarily at policy inception. This principle ensures that the insured has financial stake in the property and would suffer economic loss if damage occurs. Courts have upheld this standard, as seen in MN state insurance statutes and common case law precedents. The requirement helps prevent moral insuring claimants don't profit from damage to property they no longer own or care about. In contrast, life insurance requires insurable interest only at the time of policy issuance. Question 6. Given the circumstances, is Sanders, who owns a bakery, submitted an application for commercial property insurance? She stated the building had updated electrical wiring. However, during a post-loss inspection, the adjuster found outdated wiring contributed to the fire. If Ms. Sanders knowingly gave incorrect information to secure better terms, how would this impact her claim? A. The claim will be partially paid but reduced. B. The claim will be paid, but premium will be retroactively adjusted. C. The insurer may void the policy for material misrepresentation. D. The insurer will ignore the misstatement unless it was recent. Answer. Correct answer: C. The insurer may void the policy for material misrepresentation. Explanation: material misrepresentation, especially when intentional, can give an insurer the right to void the contract ab initio, meaning as if it never existed. In this case, the inaccurate statement about wiring was material, as it influenced underwriting decisions. Under the Minnesota Statute 60.8 sub 9, misrepresentation that affects the acceptance of the risk or premium rating constitutes grounds for rescission. The insurer is not obligated to honor claims if they prove material misrepresentation even post-loss. Retroactive premium adjustments B are not applicable, and partial payment A only applies in some rating errors, not misrepresentation. Question 7. With respect to commercial general liability (CGL) insurance, which exposure would fall under products completed operations hazard? A. A customer slips in a store aisle and sues for injuries. B. A contractor improperly installs wiring, causing fire weeks later. C. An employee gets injured while restocking shelves. D. A tenant alleges discrimination in rental practices. Answer. Correct answer: B. A contractor improperly installs wiring, causing fire weeks later. Explanation: the product's completed operations hazard (PCO) covers bodily injury or property damage arising out of completed work or products sold occurring away from the insured's premises. Option B fits this perfectly, as the contractor's completed work caused subsequent damage. The SCGL Poly CG01 defines this exposure and excludes events that happen on site during operations. Slips and falls: A. Fall under premises liability, worker injury. C. Is covered under workers' compensation, and tenant disputes. D. Relate to personal and advertising injury, not PCO. Question 8. As demonstrated by the operations of Gulfco Logistics, a commercial trucking firm, the company stores client inventory in a leased warehouse overnight while goods are in transit. Which inland marine coverage form is most appropriate to cover their custodial responsibility for these items? A. Equipment breakdown form. B. Motor truck cargo coverage form. C. Commercial property broad form. D. Bailey's customer policy. Answer. Correct answer D. Bailey's customer policy explanation. Bailey's customer policy is specifically designed to protect businesses that hold property belonging to others in their care, custody, or control. Gulfco is acting as Bailey by storing clients' goods, making them liable for loss or damage. The commercial property form C only covers own property, equipment breakdown. A deals with mechanical failures. Motor truck cargo. B covers goods transit, not when stored. According to inland marine underwriting principles and the nationwide marine definition, Bailey coverage is essential for businesses with temporary custody of clients' property. Question 9. The core principles of the indemnity doctrine prohibit an insured from recovering more than the actual loss suffered. Which of the following best illustrates a violation of this principle? A. Receiving actual cash value received after depreciation. B. Collecting both primary and excess insurance proceeds for the same property loss. C. Being reimbursed for repair costs under replacement cost coverage. D. Having a claim partially denied due to underinsurance. Answer. Correct answer B. Collecting both primary and excess insurance proceeds for the same property loss. Explanation. Indemnity ensures the insured is returned to their pre-loss condition without profit. Collecting from multiple policies for the same loss without coordination of benefits, as in B, results in over-indemnification, violating the principle. Most policies contain other insurance clauses to prevent this. ACV reflects indemnity. Reimbursement. C. Under replacement cost is permitted when properly insured. Denied claims due to underinsurance. D. Relate to coinsurance penalties, not a violation of indemnity. Courts and state insurance codes, including Minnesota Statute 65A, reinforce indemnities, a foundational contract element. Question 10. Taking into account privacy regulations, which federal act mandates insurers to provide annual notices of their privacy practices and allows consumers to opt out of information sharing with non-affiliated third parties? A. Fair Credit Reporting Act, FCRA. B. Health Insurance Portability and Accountability Act, HIPAA. C. Gramm-Leach-Bliley Act, GBA. D. Terrorism Risk Insurance Act, TRIA. Answer. Correct answer C. Gramm-Leach-Bliley Act, GLBA. Explanation. The GLBA requires financial institutions, including insurers, to provide clear privacy notices annually and allows customers to opt out of information sharing with non-affiliated third parties. The Act includes the Safeguards Rule and Privacy Rule requiring secure handling of consumer data. HIPAA. B. Governs health-related data. FCRA deals with credit reports. TRIA. D. Relates to terrorism coverage. Under 15 U.S. Code SS6803, failure to comply with DLBA can result in enforcement by the FTC and state regulators, reinforcing the Act's critical role in protecting consumer financial data. Question 11. To illustrate this point when reviewing a claim from Easter Langston, a warehouse owner, the insurer noted that damage occurred due to a forklift accident that crushed several shelves and stored inventory. The policyholder filed under his commercial property policy for the full value of the damaged inventory, but the adjuster deducted depreciation before settling. Which valuation method was used? A. Stated value coverage. B. Replacement cost. C. Actual cash value. D. Agreed value. Answer. Correct answer C. Actual cash value. Explanation. Actual cash value, ACV, is calculated as replacement cost minus depreciation. It reflects the value of the property at the time of loss, considering age and wear. Unless a replacement cost endorsement is added, most commercial property policies default to CV valuation stated and agreed valuer based on predetermined limits and are not subject to depreciation in the same way. It follows standard ISO property coverage forms and Minnesota insurance practices, which require clarity in valuation methods under Min. Stat. SS 65.1. Question 12. In light of recent developments, a tech company added a server room with advanced hardware and security systems to its existing office. Their commercial property policy covers the premises, but they recently suffered a cyber attack that led to financial loss, data theft, and business interruption. Under a typical policy, which type of loss is not covered unless separately endorsed? A. Physical loss from fire to the server room. B. Loss of income due to network downtime. C. Damage caused by vandalism to equipment. D. Direct cyber attack involving data theft. Answer. Correct answer. D. Direct cyber attack involving data theft. Explanation. Traditional commercial property policies exclude cyber-related losses, including data breaches and network intrusions. These require cyber first-party coverage, which covers costs like forensic investigations, data restoration, and regulatory fines. Business income loss, B, would be covered only if caused by a covered peril like fire, not cyber events. The NAIC. ISO excludes cyber risks from standard property forms unless an endorsement like Cyber Risk Policy ISO Form CISO 1 is added. This aligns with growing regulatory attention on cyber exposures. Question 13. The foundation of underwriting decisions often relies on various sources of information. Which of the following would be considered an external third-party source insurers can legally access under the Fair Credit Reporting Act of CRA to evaluate? A commercial policy applicant. A. Internal claims history file. B. Consumer credit report. C. Policyholder's application form. D. Insured's loss control survey. Answer. Correct answer. B. Consumer credit report. Explanation. The Fair Credit Reporting Act 15 U.S. Codice S1681 allows insurers to access credit reports when evaluating applicants, provided they give notice and the right to dispute findings. Credit reports are external sources, and like internal claims history A, or information provided by the applicant C. Loss control surveys D, are often conducted internally. Insurers must comply with adverse action notification rules if policy is denied or modified based on report. FCRA ensures fairness and transparency in using consumer data in insurance underwriting. Question 14. When considering the insuring agreement in a commercial general liability CGL policy, what does the insurer promise to do in the event of a covered occurrence? A. Pay for the insured's employee wages during trial. B. Reimburse the policyholder only after legal judgment. C. Defend the insured and pay legal obligations. D. Automatically pay punitive damages in full. Answer. Correct answer. C. Defend the insured and pay legal obligations. Explanation. Under coverage of the CGL Form A CGA1, the insurer agrees to defend the insured against claims for bodily injury or property damage, and to pay sums the insured becomes legally obligated to pay as damages. This includes defense costs, which are often covered in addition to policy limits under supplemental payments. Punitive damages D, often excluded or subject to state law. Wages and reimbursements B, are not part of the insuring agreement unless explicitly stated. This provision is central to liability coverage principles. Question 15. Among the various types of property losses, which one would be considered a moral hazard, thereby increasing underwriting risk? A. A building located near a wildfire zone. B. An insured exaggerating a loss to collect more. C. Water damage from a burst pipe during winter. D. Theft due to lack of security measures. Answer. Correct answer. B. An insured exaggerating a loss to collect more. Explanation. Moral hazard refers to the intentional manipulation or dishonest behavior of the insured that increases the likelihood or severity of a loss. This includes fraud or exaggerating a claim. It differs from moral hazards, carelessness and physical hazards, location risks. Insurers mitigate moral hazard through claims investigation, underwriting diligence, and requiring warranty representations and applications. Courts and statutes, including MIN. Stat. SS 60.8 allow insurers to deny claims involving misrepresentation or fraud. Question 16. In response to a tornado damaging Is O'Donnell's office building, the insurer paid for the structure's repairs, but declined to pay for equipment repair delays caused by supply chain disruptions. What is the most likely reason the insurer denied that part of the claim? A. Lack of coinsurance clause. B. Delay wasn't caused by covered peril. C. The deductible exceeded the loss. D. Equipment wasn't listed in the policy schedule. Answer. Correct answer. B. Delay wasn't caused by covered peril. Explanation. Commercial property coverage typically includes direct damage caused by covered perils, such as tornadoes. However, consequential losses from unrelated supply chain issues are generally excluded unless caused by the covered event itself. Insurers define proximate cause as requirement for coverage. ISO causes of loss, Special form and Minnesota-specific endorsements clarify these distinctions. Delays due to external market conditions are not within the insurer's control and are not considered insured events. Question 17. The predominant theory suggests that indemnity is best preserved when multiple insurers handle claims through pro rata liability, which clause typically ensures this outcome in commercial policies. A. Waiver of subrogation clause. B. Other insurance clause. C. Transfer of rights clause. D. Appraisal clause. Answer. Correct answer. B. The other insurance clause. Explanation. The other insurance clause determines how multiple policies respond when more than one applies to a loss. It prevents over-indemnification and allows insurers to share liability proportionally, pro rata excess, or contributing based on the clause's wording. This reinforces the principle of indemnity where the insured recovers only what was lost. Subrogation allows insurers to recover from parties not coordinate coverage. Appraisal D. Addresses valuation disputes. This provision is central in ISO forms and governed by standard NAIC policy coordination rules. Question 18. By evaluating coverage for buildings under construction, which type of policy would be specifically designed to insure structures during the building process? A. Business owner's policy BOP. B. Builder's risk policy. C. Inland marine policy. D. Commercial general liability CDL. Answer. Correct answer. B. Builder's risk policy. Explanation. Builder's risk policies provide specialized coverage for buildings under construction, including materials, supplies, and labor costs. It's typically written on completed value basis and may cover perils like fire, theft, vandalism, and even some weather events. BOP say for operational businesses, not construction. Inland Marine C. May cover tools or mobile equipment but not full construction projects. CGLD handles liability, not physical property. ISO forms like CPO 20 outline builder's risk terms and it's commonly required in construction loan agreements. Question 19. In summary of key commercial policy conditions, what is the primary purpose of the liberalization clause in a commercial property policy? A. It broadens coverage if the insurer adopts a better form without added premium. B. It restricts changes to policy limits midterm. C. It mandates arbitration instead of court for disputes. D. It allows the insured to cancel the policy without penalty. Answer. Correct answer. A. It broadens coverage if the insurer adopts a better form without added premium. Explanation. The liberalization clause automatically expands coverage if the insurer adopts a revised form that provides broader protection without charging additional premium. This ensures that policyholders benefit from updates even if their specific policy wasn't written. It applies only if the change occurs within set period before the loss. 45 days. This clause protects insureds and aligns with fair insurance practices outlined in ISO CP policy forms and Minnesota insurance contract law. Question 20. Throughout the course of a restaurant's operation that experiences fire that leads to the business shutting down for 4 months, the owner's policy includes business income with extra expense coverage. Which of the following expenses would be covered under extra expense but not business income? A. Lost profits during shutdown. B. Cost of leasing temporary kitchen. C. Ongoing loan payments during closure. D. Payroll for employees not working. Answer. Correct answer. B. Cost of leasing a temporary kitchen. Explanation. Extra expense coverage reimburses the necessary additional costs incurred to avoid or minimize business suspension, such as renting temporary location. Business income, on the other hand, replaces lost revenue and normal ongoing expenses. Payroll, D, and loan payments, C, may be covered under business income, depending on policy terms. The temporary kitchen lease is specific extra expense to maintain operations as defined in ISO CP 030 and relevant business interruption endorsements under Minnesota insurance regulations. Question 21. From the perspective of subrogation, Mr. Carlson's business property was damaged by fire started by neighboring tenants' negligence. His insurer paid the claim under his commercial property policy. What is the insurer's primary right under subrogation? A. To collect deductible from Mr. Carlson. B. To recover the claim payment from the negligent third party. C. To reduce Mr. Carlson's future premiums. D. To cancel the policy immediately. Answer. Correct answer. B. To recover the claim payment from the negligent third party. Explanation. Subrogation allows the insurer, after indemnifying the insured, to step into the insured's shoes and pursue recovery from the party responsible for the loss. This principle prevents the insured from collecting twice and helps insurers control costs. It's standard clause in insurance contracts and is supported by Minnesota common law and Min. Stat. SS 604.8. Deductibles A. Relate to insured responsibility, not subrogation. Premiums C. and policy cancellation D. are unrelated to subrogation rights. Question 22. Given the circumstances is new and applied for commercial liability insurance but intentionally omitted a history of prior claims related to environmental pollution caused by her manufacturing facility. Upon discovery, the insurer seeks to void the policy. What legal concept allows this action? A. Estoppel. B. Warranty. C. Concealment. D. Endorsement. Answer. Correct answer, C. Concealment. Explanation. Concealment occurs when an applicant intentionally withholds material facts that would influence the insurer's decision to provide coverage or set terms. Under Minnesota insurance law and standard policy language, either concealment or misrepresentation can void the contract. Estoppel A. prevents insurers from denying claims if their waived rights, warranties. B. are explicit promises and endorsements. D. are policy modifications. Concealment undermines insurer risk assessment and is grounds for rescission. Question 23. The relationship between a binder and a formal insurance policy is best described by which statement? A. A binder is a permanent contract replacing the policy. B. A binder provides temporary insurance until the formal policy is issued. C. A binder is unrelated to insurance coverage. D. A binder cancels the existing policy. Answer. Correct answer. B. A binder provides temporary insurance until the formal policy is issued. Explanation. A binder is a temporary agreement that provides immediate insurance coverage pending issuance of a formal policy. It protects the insured from gaps in coverage during underwriting and policy preparation. It is legally binding and usually lasts 30 to 90 days. This aligns with Minnesota Department of Commerce rules regarding insurance contracts. It does not replace or cancel policies and is distinct from permanent contracts. Question 24. Based on the information, the company's insurance application lists the business as restaurant, but the insurer later discovers it also operates nightclub, which was not disclosed. The nightclub has higher risk profile. How should the insurer respond under underwriting principles? A. Adjust the premium retroactively to reflect risk. B. Accept the risk with no changes. C. Cancel or non-renew due to material misrepresentation. D. Automatically pay any claims related to the nightclub. Answer. Correct answer. C. Cancel or non-renew due to material misrepresentation. Explanation. Failure to disclose material risk factors like an additional high-risk operation constitutes material misrepresentation, which may allow the insurer to cancel or non-renew the policy under Minnesota Statutes SS 60.28 and standard underwriting practices. Premium adjustment A. After issuance is uncommon without policy amendment. The risk without review. B. Risks adverse selection. Paying claims. D. Without coverage is not required if the risk was excluded or unknown. Question 25. Considering the evidence, which of the following best describes the principle of indemnity in insurance contracts? A. The insurer promises to pay the insured's full policy limits regardless of loss. B. The insured cannot profit and is restored only to the financial position before the loss. C. The insurer must pay for losses caused by all perils whether insured or not. D. The insured can claim multiple times for the same loss. Answer. Correct answer. B. The insured cannot profit and is restored only to the financial position before the loss. Explanation. The principle of indemnity ensures insurance compensates for actual financial loss only, preventing the insured from profiting. This principle maintains fairness and is foundational in insurance law, reflected in the Minnesota Insurance Code and common law. Paying full policy limits A. regardless of loss violates indemnity. Non-insured perils C. is contrary to contract terms. Multiple claims for the same loss D. would result in over-indemnification. Question 26. Among the various policy provisions, which one requires the insured to provide prompt notification to the insurer after a loss? A. Assignment clause. B. Notice of loss condition. C. Liberalization clause. D. Arbitration clause. Answer. Correct answer. B. Notice of loss condition. Explanation. The notice of loss condition obligates the insured to notify the insurer promptly after a loss to allow timely investigation and mitigation. Failure to comply can result in claim denial under standard policy forms as OCP 010 and Minnesota insurance regulations. Assignment clauses A. Govern transfer of rights. Liberalization clauses C. Relate to policy improvement. And arbitration clauses D. Address dispute resolution, none involving notification. Question 27. Within the framework of insurance contracts, what distinguishes an aleatory contract? A. It involves an equal exchange of value contingent on uncertain events. B. It is always bilateral and involves two promises. C. It is enforceable only when notarized. D. It guarantees full payment regardless of occurrence. Answer. Correct answer. A. It involves unequal exchange of value contingent on uncertain events. Explanation. An aleatory contract means performance depends on uncertain future events and the parties exchange unequal values. Small premiums for large potential claims. Insurance is aleatory because premiums are paid regardless of loss occurrence, but claims are conditional. It is typically unilateral, not bilateral. B. Notarization is unnecessary and guarantees D. Contradict risk transfer principles. This concept is fundamental in insurance contract law and widely recognized in Minnesota statutes. Question 20. How might one explain the primary purpose of reinsurance to an insured business? A. To increase the number of policies issued. B. To protect insurers from excessive losses and stabilize financials. C. To allow brokers to charge more commission. D. To replace primary insurance policies. Answer. Correct answer. B. To protect insurers from excessive losses and stabilize financials. Explanation. Reinsurance is insurance for insurers, allowing them to transfer portions of risk to other companies, thus reducing potential catastrophic losses and stabilizing their financial position. It does not replace primary insurance but supports the insurer's capacity to underwrite large or numerous risks. It is unrelated to broker commissions or increasing policy count. This mechanism is governed by state laws and is essential for risk management within the insurance industry. Question 29. In an effort to comply with the Terrorism Risk Insurance Act (TRIA), what obligation does a commercial insurer have regarding terrorism coverage? A. Exclude terrorism coverage entirely. B. Offer terrorism coverage with specified federal backstop. C. Automatically pay all terrorism-related claims without federal aid. D. Insure only natural disasters. Answer. Correct answer. B. Offer terrorism coverage with specified federal backstop. Explanation. TRIA requires insurers to offer terrorism coverage on commercial policies, with the federal government providing a shared financial backstop for large terrorism losses. This federal program, administered by the Treasury, stabilizes the market and prevents coverage gaps. Exclusion. A. Automatic full payment without federal support. C. Contradicts framework. Natural disasters. D. Are unrelated. Minnesota insurers must comply per TRIA federal regulations. Question 30. The common thread among insurance contracts is the requirement for consideration. What constitutes valid consideration in a commercial insurance contract? A. The insurer's promise to pay claims only. B. The insured's payment of premium and insurer's promise to pay for covered losses. C. Notarized application. D. The insured's promise to maintain the property. Answer. Correct answer. B. The insured's payment of premium and insurer's promise to pay for covered losses. Explanation. Consideration in insurance contracts refers to exchange of value. The insured pays premiums and the insurer promises to compensate for covered losses. Both elements must be present for valid contract. Notarization. C. Is unnecessary and maintenance promises. D. May be contractual but not primary consideration. Fundamental element of contract law upheld by Minnesota statutes and court rulings on insurance agreements.